So does FedEx want to become UPS?
It's going to try, and it's going to try in the way when it comes to profit margins. Look, UPS and FedEx have taken two very different paths in the last 2 years. Look, we've had to navigate inflation. We've had to navigate supply costs, and of course, the issues coming on with COVID as well. And one of the big takeaways here is that UPS and FedEx had taken two very different approaches. FedEx really wanted to get ahead of the labor shortage, hiring in bulk. UPS, on the other hand, targeted a very different consumer. They said, look, we're going to kind of cut back on our bulk packaging, our bulk volume, and instead target smaller consumers and increase prices. And that seems to be the strategy that has actually won out. You're looking at a chart right now. That blue line is UPS. The white line is FedEx, where UPS has actually won out. A year ago, though, that was not the case. FedEx had won out and really rewarded by shareholders because of their headcount approach. But Guy, the issue here is now that we're dealing with margin costs. Look, there is a very tight labor market, very high wages at the moment as well. And now hiring all of those people is weighing on the bottom line. So their solution here is to combine their express and ground units. Their express unit essentially is based on their own network. Their ground unit uses independent contractors. They're going to merge the two and get those $4 billion of cost efficiency, something rewarded by the market.
Yeah, I wonder, that gap, I love that chart, by the way, because that gap is so staggering. What's the timeline to close that? And are analysts thinking that it's a realistic one?
So the timeline is going to be a while, actually. But look, this is something that they've been talking about for the last 2 or 3 quarters. It's something that a lot of analysts have said, look, this is going to work. The question was just when to pull the trigger. And a lot of that had to do with dealing with which kind of management that they wanted to keep. The announcement came with Raj Subramanian, the CEO of the overall parent company, now in charge of both operating units instead of it being separated out. So that was kind of the hiccup there. But this has, again, been something that's been on the radar for a while. The question was, will they actually go through with it, given that the networks are so different? It looks like they are, and that's really more of the question that, look, now that's happened, we're good. The timeline, it still might take about a couple months, perhaps even a couple years.
This has been a company, though, that has been under pressure to make changes. The activists have been on their back. Is this a win for D.E. Shaw, one of the most prominent?
It absolutely is. And look, when D.E. Shaw, might I add, just 2 weeks after current CEO Raj Subramanian took the helm, kind of took that activist stake, one of the big requests was we have to boost the dividend, we have to reward the shareholders, and that is a promise that Raj had made. One of the big questions, though, is by how much. So seeing this 10% increase in the annual dividend is a really big deal, because just 2 quarters ago, they actually brought that dividend down and were punished by the market. If you'll remember, in September, there was an earnings report that had tanked the entire market because of this fear that FedEx is that bellwether for a recession. They've really recouped that just a couple of weeks ago, putting up some pretty strong earnings and therefore being able to defend that 10% increase to shareholders in their dividend.
And obviously, it's tricky to see if FedEx is still that bellwether, right? Like, if we're going to go out and do stuff and we're not going to buy the stuff, like, is it appropriate bellwether? Are we learning anything, though, today about the economic outlook from them?
They haven't actually commented on the macro yet. They did a couple of weeks ago when those earnings came out, and they really said, look, the volumes are declining, but we are able to stay afloat. And this, to your point, Alex, brings back the question of whether they are that bellwether, because the stock is no longer trading on whether or not they're seeing an increase in volume. It's trading on their margin story, which arguably is also a macroeconomic story. I'm going to connect it to the story you had in the last segment, which is the Walmart one. Look, Walmart being rewarded today because they're able to navigate some of the labor challenges. It is a similar story in FedEx. If you can navigate the labor challenges and the higher wages, you are going to be rewarded by this market. And that seems to be the theme across the board.
But nevertheless, this must be a barometer on the economy, Kriti. These companies must be barometers. They are, as Alex says, the companies that move the stuff. And we all know that stuff is important.
Stuff is important. I can't deny that, Guy and Alex. But yes, to your point, look, it is still the bellwether. It's been up by about 35% year to date. So there's no denying that this is not still the bellwether that a lot of people watch, simply that the stock is going to be influenced by other factors, as it always is. If you're looking at it as an economic bellwether, some of the data you're seeing come out of FedEx, DHL, even UPS is in line with what you're seeing in, say, ISM data this morning, that volumes are declining, packages are declining, and consumers are spending less, but not drastically less. This is not the doomsday recession that they warned about in September of last year.